Hello, everybody. Welcome to Thursday. The S&P 500 was up just a little bit today, 0.12%, but it was actually down for a good portion of the day. So it was nice to see it finish up again. The market is just continuing to show strength here. We're having a lot of positive days, really in a row with a few interruptions here and there. And it just has to do with, the fact the market got down so far. So many people were shorting the market, figuring it's going to go a lot farther. It didn't. They start to cover those shorts. And now, you have the retail investor, kind of the people like us, and the institutional investors, the big funds and what have you, are all kind of underweight stock for how they usually are invested, over the long term. And so, some of that money's probably coming back into the market here. As we see the data, we'll know more. But I would suspect that there's kind of this fear of missing out. The market is kind of checking off a whole bunch of pieces in terms of a recovery from this downturn that we had, from the end of July. Oil has come down. We're hitting, $72, $73 a barrel. So that takes some pressure off inflation. We got the first time unemployment reports, today. And, the job market's getting a little bit softer, not bad, but just a little bit. And that's kind of part of this, soft landing scenario, is that the job market stays fairly healthy. Inflation comes down without having to kind of destroy, the economy and people's jobs. And so far that's been true. There's always a chance for things to change, but, the market is expecting no more rate increases. So you can kind of see where things are. Market's not always right, but it's right quite often. So it's good to watch for what's happening. And really, this is not a mirage that's probably going to disappear very quickly with the amount of underweight, stocks for the retail and institutional investor. We could see this rally kind of going through the end of the year. There'll be some interruptions there, certainly, as things slow down. But when the Fed finally does pause, which, there's some thought that they might have be done raising, and the last rate increase might have been July, that, the market has historically done quite well when they finally do pause. And we've got a lot of different indicators that are, in my opinion, looking pretty good here. So we'll keep on rolling with this. We keep on looking for new pieces that are, accelerating at a faster rate than the market as a whole for our targets. We keep rotating into those, especially in our IRA type of accounts. So far, that's going okay. So anyway, we're looking forward to being able to talk to you again tomorrow. Of course, I do my live show, Talk Money with Tom. The beginning of that show, I do a summary of what I saw happening for the week, to show you some nice charts and what have you to see, kind of understanding, why this market is moving the way it is right now. And of course, we answer questions after that. So if you want to join us live, you can do so. It's 12:15 to 1 o'clock on YouTube, Talk Money with Tom. So look forward to seeing you then. Thank you very much.